Namaskar and a very good morning. Welcome to the audio cast from Kotak Securities. I'm your host and guide, Anindya Bannerjee. Yesterday, it was a collapsing euro that drove the USDINR to a fresh all-time high, 79.37 on the spot. Overnight, there was a lot of drama in commodities, equities, and currency markets. There was a big sell-off in commodities. Industrial commodities got hammered. Oil was down over 11%. For example, Brent is now at 103. US bond yields pull back to May end lows. So this entire situation basically smacks off recessionary trade. The growing fear of recession around the world is driving risky assets lower. But at the same time, the same fear is driving dollar higher. But at least in the offshore market, dollar rupee is trading lower. It could be due to various factors. One, the pullback in the US bond yields, especially the sharp decline in the oil prices. And third, probable RBI intervention in the offshore market last night. Again, the third factor we cannot confirm. This is just conjecture which we are making, that there could have been some intervention from the central bank in the offshore market. But two major factors for rupee doing well, at least in Asia today, is because of pullback in oil prices and pullback in the US bond yields. Asian equity markets are trading in the red, but SGX is showing a probable flat to a slightly higher open on the Nifty. But global risk sentiments remain extremely fragile, जिसके कारण there will be demand for dollar rupee on decline. So we expect the uptrend to continue, but at the same time, the central bank intervention will be there at higher levels, and they will be intervening quite aggressively. That's what we suspect. So which means buy on dips is the trade. Stop loss 78.90k niche on a daily closing basis, July futures. You can either use futures or you can use call spreads. We are still not comfortable to short straddles or strangles at this point in time. But if at all you want to short options, it is better you focus on short iron fly or short iron condor instead of taking an unlimited risk or unhedged bet through straddles or strangles. Cross currencies may we'll see a lot of movement in the euro and pound, because euro yesterday collapsed after there was a sharp run up in the European natural gas prices, because European natural gas has rallied by almost 100% over the past fortnight, and which means that it's going to create even bigger trouble for the European economies. At the same time, pound came under pressure with an additional political risk over the horizon. A number of ministers have resigned from the current government, and there is a risk that the prime minister, his head could be on the chopping block. So if that's the case, this political risk can increase and can drive pound lower, because pound GBP/INR has several headwinds. For example, this fragile risk sentiment is negative for GBP. The macroeconomic situation in UK is becoming precarious by the day. High inflation, weaker growth is making the job difficult for Bank of England. They have to hike rates, but they are doing it grudgingly because economy is slowing down quite dramatically. Third, this political risk has now come, and that can create further problems down the road for GBP. So GBP/INR can trade with a downward bias due to the weakness in GBP dollar. So, but when you are trading these cross currencies, Euro INR, GBP INR or GBP INR, just ensure that you have adequate stops. Because when you're carrying overnight positions, there can be large gap up or gap down. So if you carry too big a position, you may not be able to handle the losses. So therefore, keep your position sizes small, especially when you are carrying positions overnight. For intraday, you can afford to have a larger position because you can always have a stop loss and exit. But again, I'll reiterate this, that if you are trading crosses, Euro, GBP and Yen, stick to stop losses and control your position sizes. Otherwise, there can be massive losses. So as of now, Euro and Pound are both in a downtrend. Possibly in the Euro dollar, traders may be aiming for the parity trade, which is 1:1 against the USD. if euro continues to drop, it can also have a positive impact on USDINR as well. So that's it, folks. This is Anindya Bannerjee signing off. Have a fantastic day ahead.